At least that is what the Chinese are saying. I mean, that post with the viral hashtag Trump Chicken Out now has 150 million views in China and counting, after Trump all but caved to Xi Jinping.
We are going to have a fair deal with China. It's going to be fair.
Are you talking to them actively now?
Actively. Everything's active.
Mr. President, has there been any direct contact between the U.S. and China trade at all?
Yeah, of course.
And
every day.
Every day and active. I mean, you know, the implication here, what it sounds like, is there's a big deal. It's being worked on. Things are happening. We're moving forward. Well, the problem is that he was undermined in that sentiment and rhetoric by his own Treasury Secretary, who told reporters this morning that, quote, both sides are waiting to speak to the other. Waiting to speak to the other. I mean, that's the whole waiting by the phone thing that's been going on for weeks now. Of course, talking takes 2 seconds in a situation like this if something real starts. It literally takes 2 seconds. In fact, the Chinese finance minister is in Washington, D.C. as I speak, yet we'll show him to you. He is there not meeting with the Trump team right now. But why did Trump put 145% tariffs on China only to back down? Why would that happen? I mean, because according to the Wall Street Journal tonight, Trump is considering major concessions, potentially slashing some tariffs on Chinese imports by more than half. And that's pretty incredible. To cut by more than half when you haven't even started negotiating means you are negotiating against yourself. And that comes as Trump sounds like a completely different person when it comes to Beijing. I mean, just listen to him over the past 24 hours.
We're doing fine with China. I'm not going to say, I'm going to play hardball with China. We're going to be very nice. We're going to be very good to China.
I mean, that rhetoric, good to China, nice to China, is radically different than what we have heard from Trump. I mean, radically different. And words matter here. Words have started this whole thing. Listen to what he said since the beginning of the trade war.
Look, for years we've been ripped off and taken advantage of by China.
What other presidents allow China to get away with is absolutely criminal. China obviously treats us very badly.
China's an abuser.
China is ripping off the United States for $1 trillion a year.
And that almost pales to what was online. I mean, dozens of posts like the ones we'll show you here. China's brutal to American farmers. China treats us the worst. China panicked. I mean, you know, you can read the missives. At this point, though, the side that seems to be panicking is the Trump side here. Which, you know, if these tariffs are being slashed like this, that is backing off. And the only reason that you're backing off is it is so odd is that the entire fight was picked by him to begin with, right? I mean, this wouldn't be even a thing if he hadn't started it. And China has so far not had to give up anything yet. So Beijing seems to be sort of in shock and not able to believe its luck. I mean, some of the things that are being said on Chinese social media, he's like a child who changes his stances instantly. Today's Trump beat yesterday's Trump. What will tomorrow's Trump do? But Trump's retreat is stunning because it does go against everything he has said, pretty much everything.
We've been ripped off for years, and we're not going to be ripped off anymore. No, I'm not going to bend at all. Aluminum or steel or cars.
No exceptions, no nothing.
We don't necessarily want to make a deal with them.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at them. I'm not going to make a deal.
No deal, no bending, no nothing, but then they're cut in half tonight. I mean, if that all wasn't clear enough, what you just heard there was this online, the 4 words, and this really sums it up. It sums up why we are where we are. No exemptions, no exceptions. So when you look at what's happening tonight, maybe cutting it in half, that obviously is a complete and utter and total change of policy. It raises the question of whether Trump's words and his promises mean anything on the world stage. And billionaire GOP megadonor Ken Griffin tonight put it this way.
The United States was more than just a nation. It's a brand. It's a universal brand, whether it's our culture, our financial strength, our military strength. America rose beyond just being a country. It was like an aspiration for most of the world. And we're eroding that brand right now.
So why should other countries trust Trump, especially when they're out there saying this?
We've got 90 deals in 90 days possibly pending here.
90 deals in 90 days. There hasn't been one yet. The man behind the art of the deal, though, himself, right now, has no deals. There's no deals yet in that column. In fact, the only thing Trump may have to show right now are general agreements of understanding they talk about, which, of course, are agreements to talk more and eventually maybe come to an agreement. And yet, loyalists like Stephen Miller write this, quote, "You've been watching the greatest economic master strategy from an American president in history." Jeff Zeleny is out front live outside the White House to begin our coverage. So Jeff, what more can you tell us about what's going on here, right? No exemptions, no exceptions, and now maybe slashing tariffs in half? And what are you learning?
Well, Erin, a central question has always been, what is the political pain point for the president in this trade war? And it appears that we are seeing it. I mean, you can just listen over the last 72 hours or so. The stance on China has softened remarkably, really on other economic metrics as well. On Jerome Powell, of course, no longer calling for the firing of him. So when you put this all together, there is a through line here. The White House, the president, the Trump administration, as he approaches his 100th day in office next week, the markets have been one of the few sort of checks on his policies. And this is something, as we often talk about, something he watches him very carefully. And China has not blinked. They have mocked the president in some respect, as you showed there. So clearly what is happening now is the U.S. is trying to get China to the negotiating table. That is very much an open question. There is no evidence that there have been direct conversations. The president, again, just a short time ago in the Oval Office, has said there are direct talks every day. There is no evidence of that. If there actually are these talks going on, China is not saying so. The U.S. is. That's sort of unusual here. But look, the bottom line to all of this is the president has been presented with some information that he believes the economy, the markets are struggling because of his policies. That meeting in the Oval Office, so that we reported earlier, those CEOs of Walmart, of Target, of Lowe's, of Home Depot, really raising the alarm of a supply shortage, empty shelves by summer, prices rising, that got the president's attention. So it certainly is softening his stance. The question is, will China pick up the phone? Or are they going to wait for the president to blink even more, Erin?
All right, Jeff Zeleny, thank you very much. Everyone's here with me. And Dan, that's the thing. If you come from 145 and you cut it in half without even having to have a conversation, it's not necessarily a great negotiating point to be starting from. But Trump chickens out, 150 million views.
I mean, the reality is that the situation, as you hear from small business owners, you see the ships piling up, across Asia. You see these corporations, as Trump's hearing from. This is an avalanche that's now going downstream. And I think you're essentially playing poker, but to some extent with yourself, because as you continue to sort of back up here, is that even though market's up and it's a positive there, what's the next step? What's the rules of the game? And that continues to be the frustrating thing, I think, for everyone involved, from the market to corporations.
I mean, the Chinese saying, well, what's Trump going to do versus Trump tomorrow? Right? It's really negotiating with himself.
Relative to what Dan said, I think the market has caved in from February 19th, when we were trading at record highs, to the lows where they are now. Yes, we're a little bit off those lows, but it was all about messaging. It was perception. We still don't know anything more than we did then. We don't have written in stone what the numbers are, who's getting tariffed, who's going to suffer, who's going to benefit, who's paying for any of these things. We don't have, it's still all unknowns. So the market went all the way down to here on unknowns, and now they're bouncing back on small, short-term emotional bounces because people are just trying to find hope. It's like Jim Cramer said, what is it going to take for people to start buying stocks again? Yeah. But, look, what you know are the things that I don't know. To know that if what you're saying is a reality, that the boats are backed up and that there is going to be this complete breakdown of supply chain, the logistics in ships and trucks and all that is going to shut down everything, and it's going to affect everybody in the stores, that when that finally hits the market, that's a reality that the market is not going to handle quite well.
3 weeks, time's ticking. You talked about it in terms of yesterday, right? In terms of the CEOs. The reality of the situation, it's hitting.
Yeah, and I think there's a combination of a couple things. The one is the failure to communicate effectively. No one is speaking from the same hymn sheet, right? And when you're running a business, running a White House, right, the role of the chief of staff is one of the most important roles in the world, because that is the person who coordinates the message, the planning, the strategies, the deals, etc. Right now, the communication and cadence out of the White House and all the other branches right now is not in sync. Now, some of that is it's your first 100 days. These new lieutenants were not in the last administration. They are in this administration. And we know that the president likes to have the last say. The difference right now is the communication effort, the coordination of speaking from the same hymn sheet is coming from everyone else outside in the business world, coming from corporate America, from those billionaire donors, from those founders. They're all going in a swan song, a chorus, and going to the White House and saying, this has to stop.
President Trump taking some questions there in the Oval Office. Joining us now, Republican from New York, Congressman Mike Lawlor, who's also on the House Foreign Affairs Committee. Let's start with what's been going on with tariffs, if we can. Congressman, the president signaling something of a U-turn on the astronomical tariffs proposed on China today. This comes after he met Monday with retail CEOs who warned of higher prices and empty shelves. President Trump, generally speaking, seems more prone to digging in than backing down. What do you think happened here exactly?
Well, look, as I've said from the very beginning, I think the tariffs are meant to be a short-term negotiating tool to negotiate with countries like Japan, like Korea, like India, like the EU, Canada, Mexico, and yes, China, to get better and fairer trade deals for the United States, to bring down barriers to entry to U.S. goods in those countries, as well as to eliminate things like price controls, that Europe has on U.S. prescription drugs, which, by the way, means that we are paying higher drug costs to subsidize Europe. So I think the objective was always, in large measure, to force renegotiation and get better trade deals. Obviously, and I've met with many folks, including economists from Deutsche Bank, for instance, earlier this week, as well as retail giants like Walmart last week. Of course, there is concern about some of the short-term challenges as a result of this back and forth. But I think the long-term objective here, especially if the president is able to get agreements, and we saw yesterday the vice president speak out with respect to India. If we're able to get these agreements turned around quickly within the next 30 days or so, and you get the tax reconciliation bill done, as I've said from the beginning, the economy is going to take off, and that will be extremely good for every American.
And let's bring in Vanessa Yurkevich now. And Vanessa, the market closed up today, but did dip from its high midday. How are investors feeling?
Well, listen, any day that the market closes up in the green is a good day on Wall Street. But investors have told me over the past couple of days that they've really been tracking two storylines. One, what is happening with the trade war, and what is the fate of Jerome Powell, the head of the Federal Reserve. And they've received encouraging news on both fronts, both from the Treasury Secretary and from the president. Just yesterday, the president said that he was not going to terminate Jerome Powell, the head of the Federal Reserve. Investors were very, very worried about the Fed's independence and sort of the independence of the head of the Federal Reserve himself. And then today we heard from the president that he's essentially looking to de-escalate this trade war with China. That was also welcome news on Wall Street. But as you mentioned, the Wall Street and the Dow closed down 400 points off the session high for the day. Maybe investors were enjoying their profits a little bit. And investors told me that just as much as they heard encouraging news from the president and his cabinet, that could change very quickly. But just look at CNN's Fear and Greed Index. We're in fear territory right now. And I bring that up only because, Jake, for the past several weeks, we've been in extreme fear. We haven't been in the fear space since March 27th. But that does not erase the $6.5 trillion in losses that the stock market has seen since February and the $2.5 trillion in losses that we've seen since the beginning of April when President Trump really ratcheted up this trade war. And I want to read you something from Greg McBride. He's the chief financial analyst at Bankrate. This is how he kind of summed up how the markets and investors are feeling right now. He told me that a softer tone about the Federal Reserve is welcome news to investors, and the market has responded to that. Turning down the heat in the trade war with China is nice to hear, but it will ultimately need to be followed up by action. Where the rubber meets the road is in the details of an eventual trade agreement. Until then, uncertainty will continue to hang over the economy and financial markets. So, Jake, there you go. This is really a sign that today was a good, positive day on Wall Street, but that could change at any moment. We know the president and his cabinet have come out and been encouraging in one moment and then changed their mind in another moment. And Wall Street all day and really all week and months has been reacting to that volatility. Jake.
All right, Vanessa Yurkevich, thank you so much. Let's bring in Gene Sperling. He served as the White House American Rescue Coordinator under the Biden administration and as the director of the National Economic Council under Presidents Clinton and Obama. Good to see you, Gene. Thanks for being here. So
Thanks,
we rarely see President Trump back down per se, but today we definitely saw him soften his tone and his words when it comes to a trade war with China, and we've seen him going back and forth on this trade war the whole time. What do you think led to his recent change?
Well, I think they're living with the stock market being down. As just said, it's still down 11, 12%, even with an uptick day. I think that what you've seen happen is, for those of us who follow the economics, we know that the trajectory and the projection has gone down. I mean, it's stunning. Consumer expectations have gone from 2.6% of inflation to 6.7. We know consumer confidence is now lower than any time since '80, lower than 9/11, lower than the financial crisis. We know all those things, but I think what he heard today is the real pain is actually going to hit. It's not just that J.P. Morgan said there was a 20% chance of recession and there's going to be 60%, but people are going to start saying, wow, this product we buy, the price is up. This factory is being paused. These shelves are empty. The reality of people not visiting the United States for tourism over the summer is going to affect real life jobs. And I think he probably heard that very real. And I think it's encouraging anytime the Trump administration starts showing that they're focused on the economy and what the real impacts. Mm-hmm. But I want to say that if you look at the commentary, if you look at the discussions we've had where we've seen things that usually only happen to developing countries with shaky inflation records, like people fleeing equities and bonds and the dollar at the same time, those are about fundamental confidence in the competence and seriousness of our economic policy making. So I think the market can go up anytime. Looks like he's listening to the Secretary of Treasury or somebody makes a positive comment. Mm-hmm. But in the end, the question is, are you going to see serious policy from President Trump, or is the United States now going to be like on this constant roller coaster? And just look at how the news is being reported right now. Everybody is saying the President of the United States backed down.
Right.
That he got played.
Which he hates.
Which he hates. Now, if I were him, if I were an advisor, I'd say, Mr. President, don't worry about it. Proof's in the pudding.
Right.
But I don't know. Can this president take it? Can he not always respond in a way? And the more he does that, the more the U.S. brand, the more the thing that we started with Alexander Hamilton, our belief in the rule of law and our word, that is hurt. And I don't think you get out of volatility until you have a fundamental change in economic seriousness.
Do you think that the meeting with the CEOs on Monday, the CEOs of Lowe's and Walmart and the rest, and where they basically said our prices are going to go up and our shelves are going to be empty, Do you think that had an impact on him?
I think it had to. I mean, I think what's thrown markets off a lot is that he doesn't seem to have been operating on the normal economic or political constraints. We all thought that the president wouldn't handle people going down 11%, stock market going down 11% just on his own policies.
Yeah.
We would think that as a person who's been good enough politically to win an election twice, he would know the one thing you don't do is raise prices on American consumers. So I think one of the things that's hurt confidence is he doesn't seem to be acting rationally, either economically or politically. But I still believe everybody operates by some constraints. And I think the reality of the major places people shop saying, yep, prices are going up, it's going to get real, and that fury that helped you become president is now going to be turned on you, I have to believe that had some effect. My question is it going to be lasting? Is it going to overcome his style of shooting off the cuff and just caring more about his personal persona than the economy? That is the question.
Gene Sperling, thank you so much.
For more on everything that we're seeing coming out of the White House, my fellow White House insiders are here, including CNN's Chief National Affairs Correspondent Jeff Zeleny and Reuters' Jeff Mason. And Jeff Zeleny, you had reporting this morning about how it was a combination of that warning from these retailers to the president on Monday, but also pressure he's been getting from the markets, comments from his advisors on all of this. Is it a U-turn? Did it turn back around? I mean, what are we looking at right now?
I think it's a U-turn for now, but can also can always turn again, as we've seen the on again, off again trade policies. But something has seemed different this week, and I think when the markets, I think 11 minutes after the markets opened on Monday morning, when the president sent out this message once again calling Jerome Powell, the chairman of the Federal Reserve, a major loser, that really was one of the things that set the markets just into chaos that day. And at the same time, later that day, he had this meeting in the Oval Office. And we knew about it at the time. We didn't know exactly what was said in that meeting, but I am told that these 4 CEOs were invited in by the White House Chief of Staff, Susie Wiles, and others to kind of give the president somewhat of an education on what the real world impact of these tariff policy fallout sort of is. And the empty shelves really kind of, is an image. That's what you can see. And the president is so attuned to visuals. Mm-hmm. We know that he is. And this is something that, of course, harkens back to the pandemic. But even before that, I mean, think of the 1970s gas lines or something like that. So I'm told the image and just the idea of that really sort of rattled him. But really, ever since then, they have softened their tone on China after that. So I think we've seen a shift this week. Will it last? Who knows? But it doesn't answer the big question. What does it do with China? He's softening his tone. China has been silent.
Yeah, and he was saying today that there's some high-level talks, or that there are direct talks between China. He says every day. But there's a real question, to Jeff's point, of what this looks like and actually where it's going anytime soon, which is the real question.
100%, and I think that's a little bit why you didn't see the markets go up even further today. I started my career as a stock market reporter. I know.
So what do you make of what's happening?
I know what those traders are talking about. I know. Didn't know that at the time, but those traders are talking about these things and they don't know what to believe. And so when the president says one day we need to terminate Jay Powell and the next day says I never had that intention, when the president says one day I get along great with the China and the next day we're doing 145%, that kind of mixed message makes it really hard to plan. It makes it hard to plan for businesses, it makes it hard to plan for CEOs, and it makes it hard to make investment decisions for the people who are on those trading floors.
Well, and I think that is really the key point here. All of this is being driven truly by President Trump. I mean, the stock market will go up at the whim of something that the Treasury Secretary said behind closed doors that was reported and quickly dispersed to reporters. But really, everything that we're seeing here it's the Trump effect on the markets, and it's completely driven by what he is saying.
It definitely is, and it's a reason that for 3 days in a row this week, he was not scheduled to make any public remarks till after the markets closed.
Oh, that's a good point.
He did wander out onto the North Lawn today to look for a place to plant a flagpole, and he talked for a second, but he's being managed in a big way. But the Treasury Secretary, you mentioned him, I mean, those remarks yesterday were by design, once again, for Scott Bessent to sort of calm the markets. He's emerged as a leading figure in a role that is what a central part of his job is. And the president is is clearly listening to him for now.
Yeah, and for people who are curious about the flagpoles, we're going to get back to that in a moment later on in the show, but we're also hearing from Senate Republicans, including James Lankford, who is essentially talking about the timing of all of this and how important that is to his constituents.
But my advice is resolve it as quickly as we can, stabilize the opportunity where people can actually do contracts, because our worst case scenario is people pause for 2, 3, 4 months to be able to figure out what's going to happen in the future, and we start having supply chain issues like we did during COVID, where there's 1 or 2 parts that people just can't get, and we start to be able to deal with all those dynamics.
Is there any point where the White House feels maybe they are backed into a corner, or that President Trump is, in terms of what he said he's going to do and, the realities of the effects of that?
A couple of things. Like, when they do feel backed into a corner, President Trump does not react well. I mean, he doesn't react with what some people would consider a reasonable response. So if people are trying to back him into a corner, I think what we've seen from both the first term and now, that's probably not going to lead to them getting the result that they want. Number two, I think he knows, and I think this White House knows right now, that they own this economy. And they also know that there are political ramifications to that. So that's, I think, one of the reasons why there's been a little bit of more hinting of flexibility. But the final thing I would say is, reality check, making 90 deals with 90 countries in 90 days is a nearly impossible task. And so if people think that that's going to happen that quickly and that there's going to be a resolution to this quickly, it's hard reasonably to look at that and make that expectation.
Yeah, and a top-line agreement is not a full-fledged trade deal. Jeff Zeleny and Jeff Mason, great to have both of our Jeffs here tonight. My next source is an economist who served as the director of the National Economic Council, the vice chair of the Federal Reserve, that's timely, and also the undersecretary of the Treasury, Dr. Erin Burnett. It's great to have you here. Just on the China aspect of all of this and what we're seeing play out, I was thinking about this today because under Presidents Obama and Biden, you spoke about the need to stand up to China's trade practices, that it is unfair. And I've heard this from some executives who say the president has a point on China and the U.S. trade, but their point is usually it's how it's done that is the problem that they're having.
Absolutely. So I think that clearly you do have to stand up for fair trade. American businesses and workers expect you to, and China has not been a fair trader. The last administration raised tariffs on cars from China to 100%, and that was done after an investigation that made very clear they were using unfair practices to flood international markets with unfairly underpriced cars. So there are times where you absolutely have to stand up and do that. What is different this time is that this White House has imposed very high tariffs on every country and then backed off in the face of market pressures and has ramped up tariffs against China to 145%. That's basically stopping trade with China. And again, backed off when the markets really pushed back. And so it's different than having targeted strategic tariffs.
Yeah, the president himself today in the Oval Office acknowledged that trade with China is basically stopped because the tariffs are so high that it just makes the prices too insane, essentially. I wonder what you see, though, in how China is responding to this. We saw the foreign ministry put out a statement today saying, when they're ready to be respectful and not bullying, to that effect. I'm not quoting exactly. What stands out to you about the fact that we haven't yet seen, kind of that direct contact between President Trump and President Xi that we know of, I should caveat?
Well, I think they, first of all, did a lot of tit for tat kind of escalation. So they raised their tariffs and went after very specific industries in the U.S. They went after Hollywood movies. They went after Boeing. They're going after our agricultural exports. So they made clear that they have some negotiating leverage here too, and they have sat back and waited for this administration to come to them. And that's what we saw in the last 2 days.
Yeah, and speaking of all of this, Jeff Mason made the great point there about how much of this is hinging on the Federal Reserve and how that's also shaking the markets up and down, up and down. The president today was essentially trying to say, and to a degree, that he hasn't considered or talked about firing the Federal Reserve Chair Jay Powell. He did say his termination couldn't come fast enough. I should note you were interviewed to be the Fed chair by President Biden, and you have been a close advisor previously of the current Fed chair, Jay Powell's. This is what Trump had to say about him today.
I haven't called him, but I believe he's making a mistake by not lowering interest rates. And I think as well as we're doing, we'd do much better. He's keeping rates too high. He historically has been late, except when it came to Biden. He was recommended by a certain person that I'm not particularly happy with, but he will hopefully do the right thing. The right thing is to lower interest rates, so we'll see what happens.
Do you think if President Trump called the Federal Reserve Chair Jay Powell, one, would he answer that?
So, look, I think what the markets were telling the White House was Fed independence is an underpinning of why people like to invest in America. And when he started going after the Fed chair, it led to a market reaction that got the White House to pull back. And it's really important that people believe that the Fed has independence to keep inflation in check. It's more important than ever because we just had a period with high inflation, and consumers are very worried about the tariffs raising prices and reigniting inflation. So right now, having the separation of the Federal Reserve and the ability for them to make their judgments about what it takes to stop inflation from rising is important to the markets, and of course it's important to our economy.
Does the president have any point, though, when he warns that the Fed may cut interest rates too late?
So it's a very complicated judgment for the members of the Federal Reserve. It is, on the one hand, tariffs do raise prices, and the level of tariffs and the breadth of tariffs that the president has talked about could lead to a big increase in prices. On the other hand, they also stop businesses from investing and hiring, and so they may weaken the economy and the job market. And that puts the Fed in a very difficult place should it cut interest rates and risk seeing higher inflation.